Welcome back to this tutorial on financial modeling using Kaluta projection methodology. Last time in lesson 3 we ended up learning about how to model closing stock and incorporating our figures into our projected financials. Now we are going to add items in the profit and loss statements relating to administrative and marketing costs. So I'm clicking on the P&L sheet here to go to the profit and loss sheet, and here are the administrative expenses. Here let me insert some rows here. So I'm highlighting a number of rows to insert and then go to this insert rows. Okay, so now I can type for administrative expenses. So let me double tap to start typing, starting with salaries and wages. Next, rent. Next, electricity. Next, water. Next, sewage. Next, communications. Next, transport. Next, auditors fees. Let's take those first. You can add as many administrative expenses items as required by your business. For this business purpose, for this illustration, let's end up here first, and then if there will be a need to add more, we'll do it later. And in the marketing expenses area here, I can put advertising, and sales promotion. So those two elements. Finance expenses, we'll do it later when we introduce the financing aspect of financial modeling. So let us end up here. Maybe let me unbold this. Let me highlight this all that have been bolded and then click on here to unbold them. So let us now start to make assumptions about salaries and wages. As I said, in January, February, and March, this is a year zero. That is a setup period for the business, the period where no sales are generated. Okay, so I assume that during this period we only have shop manager who is employed for the purpose of setting the business and other logistics. And let us say his salary is Tanzanian shillings 1.2 million. So I type 1200. So he is the one who will start to be paid starting from January, because let me finish the figure first. He will start to be paid from January because he is employed early to set up the business. Other employees will come later, when will start to work when the business, say from March. They will start to work from March, so that April, when the business is in full swing, they are ready on. So for shop manager, you will get 1.2 million in January, the same for February, and in March, because we are now employing others. So let's say shop manager and other shop staff, in total it will cost, say, 3 million Tanzanian shillings. Okay, that is for salary. For rent, let us assume, for other months we will do them later, because here is where in March we have already established all the cost for the shop, so we can just project the rest by a formula. Okay, so rent, the assumption here is that you will hire a building, or you will rent for a building on March, because that is when your real business is projected to start on April. So on March, here is where you will start to pay rent, and in this case, rent, let's say it is 500,000 Tanzanian shillings a month for the shop. So 500,000. Electricity, you will also start in March, because here is where the shop has been rented. Okay, so electricity will be there, and let's say per month you will use about 80,000 Tanzanian shillings for electricity. For water, April again, there is where we will start, and let us assume that it will cost 30,000 per month. Sewage, let's say it will cost 20,000 per month. Communications, for shop manager, he will start right from January, because he is arranging the setup of the business, and let us assume that will cost him, say, communication purpose, that could be, say, 100,000 per month for shop manager. 100,000 again in the February, and in March, here we have communication for all staff. So let us assume that total is 300,000. Transport, again, for the shop manager only, say 50,000 on January, 50,000 on March, and on February, and on March. This is the transport for all other staff, and for that matter, let us say it is say 200,000 a month. Auditors fees, these are paid on, for example, this business starts in January. So from January up to December, that will be the whole year, and the auditor will be engaged to do his job sometimes after the end of the year. So we are provisioning for the auditor's fees on monthly basis here, and let us assume that annual auditor fees is, so let us assume that annual auditor's fee is say 1,200,000. Okay, and then I divide it by 12 to get equivalent on monthly basis. So that is an equivalent on monthly basis, and this one is going to apply throughout, but I will take it up to here. I will just fill up to here, and then from April we will project the rest of the costs. Okay, so we are done with our costs up to March. And advertising and sales promotion on marketing expenses, this one we will also start on March here. We will start to do March because that is where the staff have come, and we expect to start selling next month. So in March, where is our marketing expenses will be incurred, and in this case I can say advertising, say this one will cost, the budget for this is say 120,000 a month. Sales promotion, say for sales promotion, say 200,000 a month. Okay, now we have our costs on monthly basis up to March, and as you know from our workings here, if we go back to workings and go to our assumption on inflation, so you will see inflation index to be at unity, that is 1 from January to December. Okay, all this period the inflation is said there is no inflation. Whatever inflation we have at the beginning, that is our expectation is 5%, that one will rule out the whole year. So the inflation index for the first year is 1. Starting from the second year, the inflation now is grown by 5%. Okay, so this is our inflation index. Okay, so because we have projected our costs up to March here, that means we still the inflation index is still at unity, at 1. And for that matter, if we want to apply inflation index from April onwards, we will pick April index for that matter. So if I go back to profit and loss sheet, I have projected my cost up to March, and these ones I've projected manually, and these ones are not affected by inflation up to now because the inflation is at unity. So starting from April, now I can use the formula here. So I start with equal sign, I pick the figure for March here, click on March. Now I want to lock this column D so that whenever I drag this formula, it will always pick from the figure in D column. Okay, so that means I will need to put $sign at the end of, before D. So I'm coming back here to this, and I go back. There is where I put my $sign in order to lock column D. So column D is locked, but row is left to be relative, because when I drag this formula down, it should also be able to apply relatively. The lesson on this using of $sign to lock cell, row, or column is presented on lesson 4. So if you want to learn more about this, go to the lesson 4 and watch it. So I've locked my D column, and then I multiply here now. Oh, sorry, I've done something. Let me repeat. So I start with, let me go out this first. So I start with equal sign, there, edit. So I start with equal sign. I pick on salaries and wages figure for March. Oh, something is wrong there. Sorry. Let me go back again. Let me use back arrow here. So let me delete this first and back again. So I start to click on March figure here. And then I start, let me use this one and go back, put a $sign there, $sign before D to lock D column, and then come here, press multiply, go to working sheet. So it's April, we are projecting for April, so we are picking on inflation index for April here. Okay, but because we want to lock our inflation index to lock column to lock row 6, so that when we drag this formula, and the place for inflation index should always be in row 6. Column can change relatively, but row will be locked on row 6, that is the row for inflation index. So to do that, unfortunately, it is not possible, I think, because I will need to put a $sign between E and 6. I could do that if I were using a laptop, but for this mobile phone, and I'm using Samsung mobile, and I don't know how to move my cursor between E and 6 so that I can put a dollar sign. So the only thing I can do is to type the whole things from workings and then exclamation note and then put E and then put dollar sign and then put 6. So that's what I can do, because I cannot just move between. So I am let me go back to this, typing pad, and then go back. So I have selected that, so I need to type workings exclamation E dollar sign 6. So I'm typing workings exclamation E, and then I put the dollar sign and then 6. That's okay. So I check here to accept that. Okay, so I am done. Now I can drag this formula to the right and below, and it will still be correct. Okay, so for example, let's start by dragging it down. So I click on fill, I click on, or I can use just copy, go to click here on it, and then open a local or menu and click copy button to the left before the cut button. So click copy and then come here, select all these up to here, and then click paste. Okay, so you can see if I go to, say, on that cell there, if I go to function bar here and click on the formula to see what it has taken, you can see it has taken D10, so it is here highlighted in blue, multiplied by workings E6, that is the inflation index for the month of April. Okay, so it has correctly picked the right inflation index because we have locked column, row 6. Okay, so the same, if you come here, you will see the same. It has picked D12, that is for sewage. Okay, sewage figure, and then multiply it by inflation index, which is always becomes E6. Okay, so every time on inflation index you will see we have in this April it is picked E6. Now let us just select all this up to here, and then use this time, let us select here, and this time let us use fill. So I click on fill, and then I drag this to the end of our projection period. So it has already taken into account the inflation adjustment of these cost elements. Okay, so if we go for this first one, it is still 3 million up till the end of the year, that is December. We'll still have, and from December there is inflation index applied, so you see the figure has changed. The same if you stay in January and go down, you will see the same is applied for other cost item. Rent, it was 500, now it is 525. Electricity, 80,000, now 84. Water, and so on and so forth. Okay, if you will move down to this, you see. So that is how the inflation adjustment has been done using the formula that is explained in lesson 4. Now I can still apply the same principles here in advertising and sales promotion. I can just copy, say for example I copy this one, I select this row or this row till the end, up to here, and then I can use copy. I can take copy and then come back here, select these areas too, and then paste. The same will apply the same formula, okay, for inflation adjustment. As you can see, December, here in January, the figure has been adjusted for inflation. Okay, so that is for expenses. Now maybe let us now put the formula here for total marketing expenses, which will be let me increase zoom the view a bit. Oh, that one I think has been too big. Oh. Okay, too big to see. Let me undo that. Undo what am I doing now? I'm undoing the right things that I've been doing. Up to there is okay. There is where we were. I want to put a formula here to sum up all these marketing expenses. So let me go home here and then use summation to sum these, but it needs to start from here. So I have adjusted that, and then I click the check mark to check, so I get my total marketing expenses. Oh, sorry, I put the wrong formula. I was supposed to put it on administrative expenses. So let me undo this one. Go to administrative expenses there, put a summation formula, and then sum, adjust this to the top up to there, check this. So that is total administrative expenses. Now I can fill to the rest of the projection period to take that formula. to here, and then after that I come to marketing expenses, to sum, check to get the total for marketing expenses, and then fill this. Let me repeat, something is not okay. Start from here. Start from here. So let me put 0 here. Just type 0 here in order to so that my formula can pick from there, auto sum, check to accept that, and then I'm going to fill this to the rest of the projection period to get a sum for total marketing expenses. Okay, so I'm now having my total marketing expenses, and for this matter the formula here for net profit after tax will be now okay, because it has taken gross profit minus B17, which is total administrative expenses, minus B22, which is total marketing expenses, minus B27. Finance costs, we don't have them right now, so that is net profit before tax. So it is okay for now. And for tax purpose, first let me arrange these numbers into accounting format and put the red figures, I mean the negative figures, into red so that we see our account. So I start to select from here up to here, let's say there, and then come to this side until the end. I select the area where I will adjust my number format. Till the end here. Okay, then I go to this 1, 2, 3 here, use a separator, and then go back again to remove decimal places by clicking this twice to remove decimal places, and then go to number here and choose negative numbers formats to be red, second option here. Okay, so I am done with my arrangement, and you can see after introduction of administrative expenses, our profit and loss statement has started with loss, negative figure, and this loss is accumulated up to April, and starting from May we start to make net profit before tax, which starts to eat up the accumulated loss until June, we start to make a cumulative profit, and so on. So for our assumptions, this is how our profit and loss statement looks like. Now I have to add these items in my cash flow statement. These expense items have been added in profit and loss. Sorry, they have to be reflected in cash flow statement too. So I click on cash flow and then here at the cash flow from operations, I will insert some rows here. Let me add some rows to insert up to here, say, and then click on here, insert rows, and then go back to P&L. I can select these up to here and then copy this and then come to cash flow statement below here and paste them. Paste. I do the same for marketing expenses. We have two items here, advertising and sales promotion. So we copy and then we go to our cash flow. Here we paste them. Okay, so right now our assumptions are all expenses are done on cash basis. Okay, so cash out of the cash flow draws out cash. Expenses draws out cash out of the cash flow. So I start with negative sign in order to realize that fact that anything that draws out cash out of cash flow should start or shall start with a negative sign in our cash flow statement. That is the convention that is used in modeling cash flow in this exercise. So I double tap here. Okay, let me use edit and then go to this equal sign and then put negative and then click on P&L, because our figures now we pick them from P&L here. So we pick from January administrative expenses, that is January here. This is the figure for administrative expenses. So I press enter, and because from salaries and wages up to auditors fees, these items have been arranged one item after the other without any spaces between them, so I can simply drag my formula. So I tap and then choose fill, and then I fill up to auditors fees here. Advertising and sales promotion, they have been taken into from, there is, let me go back to P&L. You can see auditors fees ends here, and advertising and sales promotion starts from B20 here. Advertising is on B20. So I need to go back to cash flow here, click on advertising here, tap edit, and then use this button, start with equal to, put a negative sign, click on P&L, and then pick it on advertising here in January. Okay, here, enter, Okay, and because it is advertising is followed by sales promotion, I can drag this down. I can fill and drag this to cover the sales promotion. Okay, after that, then I can simply select all this, starting from here up to sales promotion here, and then fill and then drag it throughout my projection period. So I take the figures from profit and loss as they are and feed them in cash flow statement. And because expenses draws out cash from the business, so they are in red here, as you can see. Okay, so total cash flow from operations, it is the summation of all these. If I click on the formula here, we can see it is summation of all cash flow from operations starting from cash sales. So that's okay. Yeah, so we proceed with our accounting. We have debited the cost in profit and loss in profit and loss sheet, and we have credited the cash out in cash flow, okay, statement. So the double entry for the cost is completed, and if it is completed, then the balance sheet should balance. Let us see if the balance sheet balanced. Okay, so if we check our check on the balance sheet is okay, because we have followed the double entry principle for those transactions. Now we are done with this. From next presentation, we will start to do some adjustments on our figure in order to incorporate the non-cash items, okay, because thus far our assumption is that all transactions are on cash basis. Now we will change that in the coming presentation. Thanks for watching. Let us meet in the coming presentation.